Hi guys, just wanted to make this video in regards to how I trade cycles of time. Um, and first of all, I want to start off with this is the Litecoin chart, and at the moment it's on the 5-day bar chart. So this is the green bar, the green lines are high term frame cycle. So I've got these cycle points coming up in the future. I mean, these are like 2 or 3 years away, some of them. And just to show you that they're all connected, if I touch one of them and move one, I've had to do a couple of big pulls, but you see them moving together. Obviously, I've done two different ones. That's why only half of them are moving. Now let me just put that back into position, wherever that is now. Yep. So that goes back into position there. So that's that's a cycle. Now, like Gann said, if you know that what number a coin or stock vibrates to, then you can do it on all different time frames. So this is a high time frame cycle. Now, if we go down to the 12-hour, you'll see some blue lines. No, sorry, some red lines. You see these red lines? So basically, these are again another cycle in between the higher time frame ones. Now, there's roughly around about like these lines here are all the same cycle, to be honest. And what I do is I find a cycle and then I segment it down into parts. And you'll see in a minute how these parts work is when it's a cycle time point, and that's what I call them, cycle time points. Is I class them as energy points, and it's time to take a trade. And then on a lower time frame, we'll go down to the 3-hour, and you can see the blue ones as well. So you got green, which is high time frame. You probably only get like one of them every one year or something like that. The red is a medium term. Every month you get a trade off it, and then the blue one you'd get a trade probably every once every week or two. But that's roughly it. So basically, let's talk about the blue lines first, because to trade off the blue ones, I like to actually trade it right on the sort of dot of the like a 30-minute chart, to be honest. So, and I'll show you the results you get. So go to 30-minute chart. All you do is you just wait for these time points to hit on the minute chart. I've moved this. You see that white line? You wait for it to hit that point. It's by putting a timer on it. So, say for instance, this morning at 10 a.m. You wait to see if it's a high or low, and then you take a trade off it based on that. It doesn't matter about price. You don't need to know price. As Gann said, time was more important. Now, if you've got the right cycle and you've segmented it out properly, you're not always guaranteed to win, because, to be honest, it might just be a minimum like an energy point, which means it has like only like a 2% move up, and then it continues down. But what you'll do is, if you do it over the long term, you'll take a, like, say you say your win streak would be like 50-50, but you'll have very small losses, like 1 or 2%, because you're so close to the where your invalidation is, which would be the low point of that time point. But also then you can get like in the future you get like once a year, maybe twice a year, you'll get like moves of like 50 to 100%. So it really works out risk to reward really well. What you don't do, and which I've been trading cycles for quite a few years, and I haven't made as much money. And the reason being is I was trading cycles, but I was actually taking trades in between before the cycle points come up. So say for instance this was rising up here, I was thinking this next cycle point here, before it played out, was going to be a high, and I was going long, and I was getting stopped out. So what I do now is I never take a trade without actually hitting a cycle point. So anyway, we're going to go through the cycle points. Obviously, like I say, blue is lower time frame. So obviously here you would have been long because it's a low point just right after. And again, to be honest, if you look at these cycle points, they're not exact. Some of them can be really exact, and some of them are just not exact. But another way to decide when you take your trade is just do a simple trend line. And when the trend line breaks there, you've got a stop loss there, so it's probably about 1%, or you've got probably a 7-8% gain what it moved up. So that's quite simple to be honest to do. Then we've got a red time frame, which is midterm time frame one. You can see here it didn't break down, and it broke up from that point. So up until there, it was restricting price, and then it stopped restricting the price to the time point. And then up there, to be honest, you've got a maximum move of around about 7-8%. Again, a blue time point. Obviously, that's also probably taking up to about 15% there. Here you got another low. They're not all lows. I mean, these ones are creating lows at the moment. You got a low. So if you zoom in, again, you do a trend line thing on here. You might have to be honest, it's a bit harder on this one because it's not exact. I mean, I would have waited for that, but like if it continues up anyway, you'd still have to you'd have to do a trade, but you'd probably be a stop of 1% again, minimal. But the returns weren't great either, but it's better than the stop, which is so that's 4%. So it's a 1 to 4 trade, not that. But you'd be normally aiming for about 3% because you'd be looking for these to take his top out potentially, especially once you start seeing it move like that. Now this one's interesting, and this one's something I've got to explain. You get a thing called a U or an upside down U. This is a normal U. So you get a time point, and it'll create in the time point. We wait for time points. So you wouldn't take a trade there. You'd be taking it here. Now, if it creates something like a U like this, and it's roughly in the centre, like this is there, yeah, and then it continues down, you'd have to take a trade from here when it breaks down with the stop loss there. So, but aim for 2 to 1 minimum. On that one, obviously it's quite a big drop. So, and you get that quite a lot where it creates a U or an upside down U. And I don't know why it drops down completely, but I think you get like a good like 10-20% drop on that, to be honest. I'm not going to really look through it. Now look, here's a green one. Yeah, the green ones which I showed you, they don't come up often. They're not all as good as this. There's a blue one there, but because the green one's close by, you sort of like it's an odd, but you'd probably you determine you can do a trend line. To be honest, if you do a trend line off here, even if you just do a trend line from these tops here, yeah. Once it broke that point, you'd be looking for it to not go beneath uh, this point. Sorry, the point here, roughly. You might have a percent or two more because it's a higher time frame stop, so there can be a bit more of a move on there. And then obviously, if you look at the move up, it's moved up from 100 to 130. So what is that about 100? What 30% move? So that 28%. And this is what I'm saying. You know, you can have like a 4 or 5% stop here, wherever you decide to take a trade, but you can have a 4 or 5% stop and then be having a 30% moves. So it's what that's like a 6 to 1 trade. Again, yeah, this one's not a great one. Like I say, not every one's going to be great. It could just be like a minor pull down and then continuation. But this one pulled down. Once it broke beneath there, like I say, you'd be aiming for 2 to 1, or I'd be aiming for 2 to 1, and we would stop there. And then obviously that's that probably looks like 1.8 to 2 to 1 anyway. But obviously you'd have this time point here, so you'd be going because it's making a low point at that time point. You'd be taking a trade off it, and being as it's a low, if it was a high, you'd be taking a short. Being as it's a low, you're taking a long. Yeah, it's a good example of not a great one, to be honest. And it's quite interesting because more or less at the time of the energy point, it's been pushed up to the energy point. It had a pullback, but it continues on. You probably could end up with a loss on that one. So, like I say, not all energy points are like going to be amazing throughout the year. Like I say, if you let me zoom out a little bit to pick some really nice ones throughout the year. If you pick a really nice energy point, this is all this year. So this point alone, this one here, if you pick that one there, and you took that long off that energy point there, you've got like 36% move where you've got a small pullback continuation, but you're not buying it until it actually hits that point. And if it's a pullback on the energy point, um, and likewise, you could have done you might have done a trend a trend line there and actually took it on the trend and the breakdown and lost the trade. But once it gets past there, you can use your 2 to 1 trade minimum, and as long as it doesn't break beneath that point, and it can do as well. Sometimes it will, but you got like 30-40% trades. Or what, you have to take a 2 to 1 trade first, but you leave some on, and the rest goes. Here's a really nice one, and that's the other thing. Sometimes if you don't take it, like say for instance this one here, you might have a trend line, it doesn't break it, and rather than it being like a low, although it looks like a low there, it's on the energy point, it's holding it up, and then it just breaks down completely. So you can have breakdowns on energy points as well, even if it's a low. So that's why it's good to use your trend line to make sure it gets above here, and you can put your stop there. Anyway, so it broke down. I wouldn't say I would have took a short from there, but at the same score, I probably would have took a long because it didn't break the trend line. Sometimes I do trend line ones, sometimes I don't. The reason I don't do trend line ones sometimes is if I've got multiple coins and they've all got say an energy point coming up around about on the same day, it's highly likely that is going to be either a major bottom or major top. Now, if you've got just a coin randomly that's literally got its energy point and no other coins on that day, I've got one around that time, potentially it's a bit more. I'd normally do a trend line, but so yeah, you sort of like base it on like other experience which you get from just using these things. Again, that one would probably be a stopped out. Uh, this one's an interesting one because medium time frame, you wouldn't be doing it on the half hour. You'd probably be doing it on a 3 hour time frame. And again, if you do it on the trend line break of the trend, which is about there, you can see the risk to reward is okay. You're not going to get like 30-40% moves all the time. Might be getting 5% moves. You might only take like a partial profit there of 6%, and your stop would have been at 2%, and then put your rest at break even. But again, it's another way you're just grinding your money up, aren't you? That one would have failed. You probably would have took a long off that and then failed. And then like, here we go. Here's a really nice one. Look at this one here. So this one is like So we've gone through this chart, and this is like one of the best ones on here so far. And that's all the way back in December. So that's 6 months. But what you remember is you only need like one of these every 1 or 2 a year, and you get that not major breakdown. It's a nice one as well because it's look done at A, B, C. So you'd probably be taking it, and then that moved up from there in total 60%. So if you use it right, once in a while you'll get your mid moves that are just like 5-6%, but your other moves are a lot stronger. Again, we've got a red medium time frame cycle point here. Again, you'd be taking it off a short because it's a high point. It's nice one thing about this one is when it's hitting the cycle point, it's taking its eye out. So that's like, okay, well, if it does a swing failure pattern there, I'm going to take the short. And you do take an aggressive short there. Otherwise, it doesn't look like much, but it's like a 8% move down, nearly 9% move down, just for waiting for time points. Yeah. Now, if you've got these time points on all different coins, and all different coins vibrate to different numbers, yeah, you've got multiple trades. So you might think, oh, you might be waiting a month for these like 8% moves, but then you're only waiting a week for the other blue trades, roughly, depending on how big your cycle points are. I mean, your cycle is, um, but you just can keep on going. To be honest, again, it's not an amazing move on that one, but then you've got a very nice one on this one, the top point here, and then you've got like a nice move down from that top point there of 15-16%. Yeah, here's another one with VU. So if you trade this one here, it's an upside down U, but basically you can see how where the cycle point hit, the market's been going down for a good 4, 5, 6 days anyway, so you'd be reluctant to start shorting too much there because of the move that's happened. Say, for instance, if it done this, you take your trade once that breaks because it's in the centre of the energy point, which I call the energy point. You take a trade there, you stop at the lowest point there, and then what you'd get is a move that goes 45%. Like I say, I don't trade anything in between these. Now these are all different cycles. Obviously there's all different cycles to make these. Every move in the market is an energy point, yeah. So there's energy point there, energy point there. They're all different cycles, but this is the primary cycle. So every coin has a primary cycle. Every stock has its primary cycle. I'm just trading the primary cycle. Now I can find other cycles, but you get yourself tied up a little bit. And I'd rather just do primary cycles and have 20 or 30 coins I'm watching. I'll probably get a trade every 1 or 2 days. And then I'll get some very good trades probably every, like, say, one or two very good trades a month, which could be 30 or 40%. So I mean, your risk and rewards are, like, say, even on this one where you made an upside down U, so you've got to put your stop a bit lower. It's not an amazing amount. It's a stop of 4%. You know, to gain whatever it gained. Well, look, it was an amazing point, really. So you could let it run. I mean, the other thing is, cycle points are okay, but you need to understand other things like what sort of market we're in. If we're in a bullish market and it does that, and you've got a good point of entry, why would you be selling it? Why would you be selling it? You'd hold on to it, and then potentially you could be short a couple of cycle points when they hit like that one, and you could leave it on to protect that one, and when it gets stopped out, don't worry about it. Just let it keep on running. So that's how I trade cycle points as well, and primary cycle points. Um, and like I say, all these points, like I say, I can prove it now, are all connected. Because I'll do fib pulls, take the what's name off. You can see when I move on, all the other lines move. Obviously, like I say, each cycle I have to use 2 fib pulls because there's not enough points I need in one. Because there's over 10 points I split a cycle into. So yeah, that's how I tried it. Let me just get that back onto where it was because it'll be out of position otherwise. There we go. And that's it. That's how you trade cycle points. You got to know how to find them. I'll be honest, on any chart, crypto charts, I can find the cycle number. It vibrates to within about like 10 minutes, and then from there you've got unlimited potential. One thing I will say, like I say, I lost a lot of money trying to predict what the cycle point would be. I'd be going, oh, that's going to be an high, and I'd be longing it before it gets there, and then it'd be shooting down for a pivot low. So I don't do that no more. I just basically just wait for my cycle points to hit within half hour to a couple of bars away.